The market never moves for one single reason, and if you've been watching Hype over the past few days, you already know the price action has been nothing short of chaotic. Just 24 hours ago, Hype was up 4.37%, an impressive rebound considering the coin had fallen more than 7% earlier in the week. On the surface, the technicals looked bearish, moving averages pointing downward and a MACD that wasn't giving traders anything to celebrate. Yet something underneath the surface was building pressure, and now the entire crypto space is trying to figure out why Hype is suddenly climbing when many indicators still look weak. The first sign came from the charts themselves. Even though momentum indicators were leaning bearish, price action started forming a classic falling wedge pattern, one of the strongest bullish reversal signals in technical analysis. It wasn't obvious at first. The market was quiet, liquidity was thin, and sellers seemed to be in control. But as the wedge tightened, bulls started defending the lower trend line with surprising strength. Suddenly, a breakout to the upside formed, pushing Hype directly toward its next major test, the $30 resistance zone. Traders who recognized the wedge early had been waiting for this moment, because a clean break above $30 opens the door to the next target around $34, and the more ambitious Fibonacci traders are even eyeing the $38 region as a longer-term reclaim level. This wasn't just technicals doing their thing. While the pattern was forming, futures markets started heating up. Open interest in Hype futures began to rise sharply, signaling that more traders were positioning themselves for a potential move. Increased open interest doesn't always mean bullish momentum. Sometimes it precedes heavy shorting, but this time the breakout coincided with the OI spike, suggesting fresh capital flowing into the coin with expectations of upward pressure. As open interest climbed, social media analysts and large accounts began commenting on the move. Some, like Altcoin Sherpa, warned of a potential fakeout, but others argued that Hype was showing unusual strength compared to the rest of the market, and that broader market context matters. Bitcoin dominance has been sliding slightly, a small but meaningful signal in crypto. When dominance drops, liquidity often rotates from Bitcoin into altcoins, and Hype seems to be one of the coins benefiting from this shift. This is happening at the same time the Fear and Greed Index sits firmly in the fear region, a psychological state where smart money historically starts accumulating while the retail crowd hesitates. When fear is high but price refuses to break down, it often means buyers are quietly stepping in. But the story gets bigger when you factor in fundamentals. One of the recent developments surrounding Hyperliquid is its integration with Reactive Network, a move designed to strengthen cross-chain connectivity. These upgrades rarely cause instant price spikes, but they do build confidence among infrastructure-focused investors who track long-term ecosystem viability. Stronger cross-chain capabilities mean broader utility, better liquidity pathways, and more reasons for developers and traders to keep using the platform. Combine that with rising social discussion around altcoin rotations, and suddenly Hype isn't just another chart pattern. It becomes a narrative coin with improving fundamentals. Then there's the macro environment. With the U.S. Federal Reserve signaling rate cuts, risk-on assets across the board are starting to loosen up. Crypto historically responds well when monetary policy shifts toward easing. Even though Hype had dropped sharply earlier in the week, the broader sentiment helped create a foundation for a rebound. Markets don't move in straight lines, and a 7% pullback followed by a 4.37% recovery suggests that traders were treating the dip as an opportunity rather than a warning. All these elements, technical breakout energy, rising futures interest, slight altcoin rotation, strengthened fundamentals, and a more supportive macro environment, stacked together to create the perfect setup. What looked like a bearish chart earlier suddenly flipped into a short-term bullish narrative, and now all eyes are on whether Hype can finally break and hold above the crucial $30 level. If it does, momentum traders, algorithms, and breakout chasers will likely pour in. If it doesn't, bearish indicators like the weak moving averages and negative MACD histogram could regain control. For now, the reason Hype is blowing up is simple. A convergence of technical, structural, and psychological forces creating a surge of interest exactly when the market least expected it. The wedge breakout, the rising open interest, the growing altcoin appetite, and improving project fundamentals collided with a broader shift in market sentiment to produce the sudden uptick. The next few candles will determine whether this is the beginning of a larger run or just a temporary relief wave, but the current momentum is no accident. It is the direct result of multiple bullish factors aligning at once, and traders are now watching closely to see whether Hype can turn this short-term strength into a sustained rally.